Tony, can we talk about market indigestion? When you say market indigestion, is that a 5% move lower, a 10% move lower? What is it?
Well, John, it really depends on what you're looking at. So to me, we so focus on the S&P 500. And as you know, I stopped giving a target a while ago because I don't know how to evaluate 10 stocks, which now make up 34% of it. So could the S&P 500 go down between 5 and 10%? It could. The equal-weighted S&P 500 and the Russell 2000 and the average stocks, you know, the troops versus the generals, they've already seen some pretty poor relative performance. They're actually at a cycle relative performance low, where a lot of damage has been done. So I don't think you're going to get as much pullback in the broader market, because you've already seen it, than you could in the S&P 500.
So what are you advocating for right now, Tony, given everything you've just said?
So what I missed last year, and I think what a lot of people miss, is if you remove the Magnificent Seven stocks from the S&P 500 operating earnings, according to LSEG, my earnings wizard there, TJ Dillon, you would have had a negative earnings year ex the Mag 7 for the S&P 500 operating earnings. The same is true for this quarter. So it's no surprise that you got the market concentration that you got because you had a concentration in earnings. What I'm talking about is the market indigestion is doing exactly what it's doing now. You pull back, you create fear, the S&P targets come down, people start calling for a correction, the bull-bear ratios get out of whack and get back to more normal. The overbought condition is relieved, and it sets the stage for later in the year. The higher rates are now, guys, the more likely they're going to be lower later this year, because it's going to have a dampening effect on the economy. If the lower rates and or the talking of lower rates and looser financial conditions got us into the reacceleration, won't the opposite happen, given how talking of not lower rates has tightened financial conditions? And I think that and a better earnings contribution really sets a stage for a recovery in the second half.